Welcome back. It's February. I had something in my eye. February. So we're gonna go over something big, risk management. I get a lot of questions and I get a lot of gripes and I get a lot of people telling me what won't work and what will work when it comes to daytime, when it comes to swing trading on the daily time frame, saying you can't have a small trading account and trade on the daily time frame. I don't know, it's because they're setting their ways or they're brand new to the game or whatever the case may be. All right, so when it comes to trading, risk management is key to survival. And trust me, without it, you basically like flying a plane without a license. We all know that how that ends, and it doesn't end well. All right, it's crucial for new traders to understand that risk management is not just about avoiding losses; it's also about maximizing profits. All right, so of course, I'm gonna go on my 10-minute rant real quick. All right, and then we're gonna talk about that, and then we're gonna go over a timeline, not a timeline. We're gonna go over a breakdown, a strategy of how we can actually get this done. All right, so let's talk about some common challenges. What are some common challenges? All right, that traders face. One of the biggest obstacles is the emotional trading, and that's why I always preach about, if you're brand new to the trading space, trading on the higher time frame. And this is just my opinion. All right, you can take it and run with it, or you can throw it in the trash. When you're new to the game, it's natural to get caught up in the excitement of the potential profit or the fear of loss, but letting your emotions dictate your trades is also a recipe for disaster. Without a solid plan, you'll be making impulse decisions that can quickly drain your account. All right, and what I say when I say it's best for messing up my desk, but it's for new traders, I would say go on the daily time frame. And if you can find trades and be profitable on the higher time frame, and you're profitable there, and you can see price action, you can read support and resistance. The reason why I say that, because it's a slower market or a slower candle formation. All right. So take fear, for example. When you're in the trade and it starts going against you, the fear can take over and cause you to make rash decisions like getting out, getting a new position, or you might close the trade too early, or worse, you might add money in hopes of recouping your losses if you're down. Me personally, I've never done that, but I've known some people who have. Never, always place a stop loss and never add more money thinking it's going to go, because all you're going to do in the long run is end up losing more money. So similarly, when you're on a high streak, greed can kick in and lead you to take on more risk. How many of you guys, if you've been trading so far, or been trading at least a couple months, you get 2 or 3 trades, you like, boom, I'm about to get the bag. So now you went from a 0.05 lot size to a 1 lot, and next thing you know, all your trading profits are gone. All right. Another major challenges that new traders face is the lack of a solid plan. And if you go to the video up here on the top, I'll link it. I talked about that, and I gave you a straight trading plan to help you out, and it was free. All right, so if you didn't go to that video, if you didn't see that video, go to it and check the link down below. I'll give you a free trading plan. All right, without a clear strategy, you're just winging it. If you just come to the computer, it looked like it's going up, I'm gonna take a sale. Oh, it looked like it's going down, I'm sorry, it looks like it's going up, I'm gonna buy. Looks like it's going down, I'm gonna sell. Without no risk parameters, without no solid strategy, without no risk, if it goes this way, if I'm gonna get out. If it breaks this way, I'm gonna get out. So you're just winging it. All right. The approach might work on the short term, but it's a surefire way to fail in the long run. Being honest, a solid plan includes setting clear goals, identifying high probability setups. I always talk in my group, in my Discord group, about A+ setups. And before we go on, I forgot to tell you that make sure, if you need if you need a good solid trading community, the link is down below. I do have a free Discord as well, but when you want to if you actually want to get into where I live trade with you guys and go into the lock boxes that's on the side, I do have tiers. So if you go down below the free Discord on there, you can see at the bottom it's another paid Discord community as well. But with that being said, let's talk about some risk management strategies. all right, that can help you avoid the stress and common pitfalls. One of the most important setting is basically setting a stop loss order. Stop loss order is basically automatically close the trade. So say I have a 100 pip stop loss. I do one-to-ones. So say I have a 100 pip stop loss and I have a 100 pip take profit. I'll go calculate my risk. All right, I want to risk $36 on that. You can go to my FX book and look at, okay, 100 pip, this is my account number. I mean, my account that I have in there, how much I have in my account, let's say $1,000. And then I go down and I say 100 pips. So it gives me 1%, or if you have to go 0.5%, 0.75%, it'll tell me how much of a lot size I need to have $36 to lose $36 to $50. See what that means? See what that is? That's part of my trading strategy. Calculating your position, what I just talked about, is definitely vital when you're determining how much you want to risk on the trade. All right, you need to consider the overall account size, the volatility of the market, and your personal risk tolerance. By taking a calculated risk position, you can ensure that you are not over leveraging yourself and setting yourself up for disaster. The biggest thing I can tell you guys is that the reason why you're so uncomfortable with when you trade or you're taking a position is probably because you're over leveraging. All right, I hope that makes sense. If you're over leveraging and the process of your trade could possibly wipe out your whole trading account, you're severely over leveraging. You need to back down. Get the greed out of your mantra. Get the greed out of your head. All right. Oh, well, that's only $36 a trade. Oh, that's only. The problem is you guys are trying to trade to make a living before it's your time. You get what I'm saying? All right, risk small. And the more you grow your account, the more you can, every $1,000 you can go up in lot size. Every $1,000 you go up in lot size. All right. So what we're gonna do is we're gonna go to down to my trading. All right. So what we're gonna do is here. Hopefully you guys can see this. Hopefully you guys can see this. So and I'll put this in the PDF down below so you guys can actually go down to that. This actually, I took some time on this. So this is actually not free. It'll be on my account. I'll show you this real quick. So if you go to the actual link down here at Gumroad, it'll be posted on here as well. And let me go over here. Let me stop this. And let me go over here to the screen share. All right, and window. All right. Hopefully you guys can see this. All right, so if you go to here, I actually have my 1, 2, 3 forex playbook, simple rules. All right, this was all the trades I won in 2024. It still does apply to 2025. All right, I use the same setup over and over and over. If you've been watching my videos, as well as the beginner guide from A to Z. So if you're brand new to trading, right? If you're brand new to trading, it's everything you need to know, from how to read a candle to the broker, different brokers, different prop firm trading accounts, strategies, and things of that nature. It actually goes a full detail for that. And so it'll actually be in this on gumroad.com. All right, so make sure you check that out. Let's move on to my actual, let me remove this real quick. Now let's go on to the trading plan. So the trading plan will be there. All right. And let me get rid of this. All right. Let's get it. All right. So I didn't go do my 10-minute rant today. But we're going to get into it. So a small trading account. This is basically off of the $1,000 account. As a swing trader, you can trade with $1,000, which is considered a small trading account. And I typically take 13 to 16 trades a month, but they're on a longer term scale on the daily time frame, because sometimes I don't take that many trades. It just depends on how many pairs that come into play during the month. And I can show you my list. And the reason being I trade the daily time frame and I can have all these trades is because I have 20, 30 pairs that I can look at every day at 5:00 p.m. Central Standard Time. All right, let's not get too far into that. So for an account of $1,000 account as a swing trader, And this is just based off taking 13 or more trades per month. You'll manage your risk carefully, especially since some trades will be open simultaneously. And here's a silent risk management approach. All right, so the rule is 1 to 2% rule. All right, you 1% risk is $10 per trade. 2% risk is $20 per trade. And before you get into this, say, man, I want to make more money than that. If you're not even profitable yet, you need not to be thinking about how much money you're going to make. You just need to think about being profitable. And if you think about it, right, let me bring out my calculator. All right, so I'm sorry, my calculator. And if you put $1,000 in there, why you learning and it's getting skin in the game, right? You have $1,000, and if you divide that by 10 per trade, you can lose. Well, I should have did that in my head. You can lose 100 trades before that account is gone. You get what I'm saying? That's 100 trades before your account is blown. Versus you trying to over leverage, and then in 4 or 5 trades your account is blown. So get what I'm saying? All right. So since you have multiple trades running simultaneously, sticking to the 1% per trade is safer option to avoid overexposure. And a lot of these guys online, they don't tell you about. Oh, let me get this off here. Let me get that off here. All right, a lot of guys in the industry, and I'm not gonna name names, but they don't tell you about the overexposure to how many trades you have in and how much per each pair that you need as far as liquidity. I would say liquidity. I would say equity. How much equity you need to take that trade? Get what I'm saying? So if I'm taking an EU trade, I need to have a certain amount of equity in my trading account to even place that trade. You know what I'm saying? So we're not going to get too deep into that. I'll do that in another video. All right. So total risk exposure on account drawdown control. All right. If you have 4 trades open at the same time, risking 1% per trade, your total exposure is 4% of your account. Max is $40 max risk at any time. See what I'm saying? So you can have 4 trades open. If you risk 2% per trade, all right, right here, 2% per trade, and you have 4 trades running, that's 8% of your account, which is 80% max risk at once, which is a little aggressive. You get what I'm saying? So I know, $80, but see, the thing about it is, if you have a bigger trading account, 50K account, 100K account, or whatever the case may be, and this can go off of, you calculate it as far as your prop firm as well. All right. So position sizing, if you've been with me for a while, I use the ATR, the average true range method of fixed percentage stop loss based strategy. Example. All right, now if you're not understanding anything I'm saying right now, you're probably too far up the spectrum and you just now starting off. You need to go back to one of my videos where I explain exactly the beginner side of it. All right. So if you set a 50 pip stop loss and you risk 1%, that's $10 per trade. You should size your position so that each pip is worth 20 cents, which would be to 0.02 lot on most USD pairs. All right, adjust lot size based on stop loss distance to maintain consistent risk per trade. All right, I hope that made sense. All right, basically it's telling you in the plan, basically I'm telling you is have your fixed rate. You can have a fixed rate, but I normally do the ATR when I do the 1-to-1s, and I'll show you on the chart in a second. So say it's this candle is 80 pips, right? So this 40 pips. What I do 1-to-1, so I'm going 40 and 40. So I go to my FX books and I calculate what's 1% risk. All right. Most of the time I want to risk like $36, whatever the case may be, because I have more skin in the game. All right. All right. So my main takeaways from this, key takeaways is stick to 1% per trade to allow multiple positions without excessive drawdown. All right. You got to think about it. If you have 13 trades, multiple trades running simultaneously, because when I say simultaneously, I may take 4 trades today, and while it's running, I might see another one pick up the next day. All right. And while I'm in this one, I'm in 5 trades, but the next day after that, those 4 trades might exit out, whether it's a win or a loss, but I'm still in this one right here. Now I'm only in 1 trade, but you see how that goes? When simultaneously I'm not in 13 trades at one time. I hope that made sense to you guys. Simultaneously throughout the month, I might have 4 running right here. Another one picks up on that third day of the month or whatever the case, or that week. These exit out. Now I'm in this one by itself. Then the third week, I might get 2 or 3 more. All right, boom, those are running. All right, on the third week, 2 days later, I might got 3 or 4 more setups. All right, that just happens when you have so many pairs. And if I were you, if you just starting off, I would stick probably to 1 pair on the daily time frame just to learn. Not saying to trade it, but to learn it. All right. All right. So stick to 1% per trade to allow multiple positions without excessive drawdown. Limit total exposure to around 4 to 6% max at a time. Adjust your lot size based on stop loss and the risk to keep risk consistent. All right. My other key takeaways is smaller stop loss, larger lot. Larger stop loss, smaller lot. Pretty simple. All right. Stick to a fixed percentage per rate. Fixed percent risk per trade to stay consistent. All right. So the thing about it is, if I say, hey, I want to risk $36 or $25, it just that's what it means by that. $36. I know even if it's a 100 pip stop loss or a 200 pip stop loss, I still can risk $36-$40 on that trade. I just have to go very low, which the lowest you're going to get is 0.01, which is 10 cents per trade. All right. So you cannot sit here and tell me that if you have a smaller, if you have $100 account, yes, you can't take all those trades at one time, because the reason being you have to have some type of equity to even place that trade. Because each currency pair, you need a certain amount of percentage of it uses a certain amount of percentage of your account. So EU might use 1%. GBP Chef might use 3% of your account. So you got to think about that. Every pair you trade, it has a certain percentage of equity you need to even place that trade. All right. So hopefully I didn't get too deep into that. All right, so remember, this is a small account trading. When I mean small account, it's $1,000 account. All right, and if you can't afford $1,000 of your own money, hey, there are prop firms out there where you can trade $5,000, $10,000, and $30,000, $40,000, or whatever the case may be. And it's the same. It's the same risk parameters for those big accounts, and just like these small ones. All right, you just have to adjust how much you got to. Only thing that would happen is that your 1% changes with how much money you have. All right, I hope that made sense, you guys. I'm not going to continue to beat this dead horse. All right, and the biggest thing I want to talk about, want to leave you with, if you, oh, hold on, I messed up there. Hold on, let me see. If you are rocking with what I got going on, I don't know, I just kicked the desk, my bad. All right, so if you rocking with what I got going on, if you've been following me for a while, make sure, if you're still with me, make sure you put all gas, no brakes, and tell me if you need me to make some more risk management plans for you guys. I can make it specifically tailored to you, but if not, the link will be in the description. Hey, you could have just screenshotted everything. Go over the video and just screenshot it. All right. Other than that, all gas, no brakes.